Yeah. Oh, cool. We're starting out strong today, boys. Good morning and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Red on the internet and Matthew in real life. Today, we're going to be talking about the GTX 1630 and its release date. The RTX 40 series release dates. We're going to be talking about Cardano spiking 25%. And of course, Bitcoin seeing a rebound. Will it last? PayPal partnering with some Aptos labs. A Crypto.com UFC launch of NFTs. And then the mining profitability for the day. It's a short news cycle this week. So good news is, hopefully that means that we get some more Q&A in near the end and some more discussion. Let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Boom, and welcome back, everybody. So I'm not seeing anything that would be causing an echo necessarily. If you are experiencing an echo, make sure you do not have the stream open in multiple different areas, essentially. And then if we are having multiple users experiencing echo, let me know. Let's get into the first topic for the day. NVIDIA GeForce GTX 1630 entry-level graphics cards rumored to debut on the 15th of June. NVIDIA's GeForce GTX 1630 graphics cards will be aimed at the entry-level segment and is expected to launch next month, reports on Video Cards. The leaked timeframe for the NVIDIA GeForce GTX 1630 only shows the shelf release dates, but does not provide a review embargo timeline. There is speculation that the company does not want initial reviews for the new graphics cards, which means the media will have to grab the GPU for review purposes themselves. The NVIDIA GeForce GTX 1630 is expected to utilize a cut-down TU117 with 512 CUDA cores, lower than the 1650 model, which offers 896 CUDA cores. The card will also pack a 64-bit memory bus, a huge cut down from the 128-bit bus that the TU117 GPU has at its disposal. The memory bandwidth is lowered to 96 gigabytes per second. That's pretty bad for mining, of course. The bandwidth is less than the 1050 Ti graphics cards, a Pascal series graphics card from 6 years ago, but retains 4 gigabytes of GDDR6 memory, base clock of 12 gigabits per second. Compared to the GTX 1650 GPU, the memory is well over 72% quicker than 3D Mark benchmarks that have appeared online. The GeForce GTX 1630 will also come with a low 75 watt TDP and will not offer any dedicated ray tracing or DLSS support. The company has enabled ray tracing for non-ray tracing core GPUs, but the performance will not be game ready on low resolutions. Esports cafes in Asian markets could use this card, but with the standard resolutions, many AAA esports titles will be missing on systems using the 1630. While we know the current date for the 1630 GPU from NVIDIA, we don't know the actual pricing or specific marketplace regions. With no review units sent by the company, it may also be limited to particular areas on launch. Since users will not receive the same performance level as the RTX 3050, whose pricing starts at $249 US, it is safe to believe that NVIDIA might consider a $150 pricing for the new variant. Also, this would fit appropriately in the cost range considering the 1650 already retails at $190. So there you go. We have a release date for it. I'll be trying to get one to review for mining. I do not have high expectations. The power consumption is nice, albeit, of course, that comes at a price, which is, of course, the lower memory bandwidth, the smaller bus, and I don't really like small buses. You know what I mean? I need them big buses in my life. But that's pretty much about it. If you were looking for something maybe to power a Minecraft PC for your kids or something like that, maybe it's worth it. Let's talk about the RTX 4090 in August. August. So we talked yesterday a little bit about NVIDIA and, of course, the reduction in the demand for their GPUs on the RTX lineup, as well as the CMP lineup, and the reduction in revenue surrounding mining specifically for NVIDIA, which is affecting their bottom line. We also talked about how closely the 40 series is coming to launch in this kind of market where we sit at a place where more than likely, gamers that were sitting on RTX 2080 Ti's and 2080 Supers, etc., probably skipped the 30 series generation due to, of course, the high prices and low availability. Now, as the GPU prices for the 30 series start to come down to MSRP, the gamers that are sitting on these old 20 series cards are probably not so inclined to, of course, pick them up because we have the 40 series launching. For miners, this means we probably want to be taking a look at the used market here coming up in August and September as gamers start to upgrade from their 20 series GPUs to the 40 series GPUs. And this can be good news too, even considering the Ethereum merge, because the 20 series GPUs, at least the top end models like the 2080 Ti and the 2080 Supers, for example, function really, really well on alternative algorithms such as Flux. That being said, here's the details on the launch. We have learned that the RTX 4090 and 4080 may have more in common than previously expected. Although both SKUs are using different GPUs, the 8102 and 8103, they could actually use the same board, the PG139. The RTX 4090 has a SKU design or designation of 330, while the RTX 4080 is 360. This information is new. We do not know if this means that both GPUs are pin compatible, but they are clearly listed with the same board as of today. As far as we are aware, NVIDIA has not yet confirmed the GPU specs of the RTX 4080 and 4070 SKUs for two reasons. Each model is based on a different GPU, and they launch consequently after each other. NVIDIA is yet to provide the updated specs to AIBs, which is why it is probably not worth speculating. NVIDIA GeForce RTX 4090 is now expected to debut in August. The current launch schedule lists the 4080 with a September launch date, and the 4070 should launch in October. However, our sources expect some dates to change because AIBs still have lots of RTX 30 inventory left. And the last thing they want is NVIDIA to announce a new generation. Just as we talked about, this is going to get extremely tricky because they want to get rid of all the 30 series stock at current MSRP prices. typically in a release cycle like this, we would see the RTX 30 pricing start to drop down below MSRP with lots of kind of liquidation sales and that sort of thing going on, especially from retailers and so on, as they prep for the new inventory of the 40 series. But that's not exactly quite happening yet due to, of course, the previous demand that was in place. So it's a really interesting position to be in. We have seen it before. History repeats itself. This happened in 2018 as well. We kind of saw that start to happen with the refresh of the 20 series, like the 2080 Super, for example. And it's interesting to see it happen again, meaning we can kind of extrapolate this out to 2024 and start to get prepped, right? While one should expect all three SKUs to debut on the same day, their launch will be spread to the following weeks. Also note that the announcement date has not been confirmed. It was previously reported as July. Overall, this information matches what Copilot has said, except now we can talk months, not days. So here you go. The rumored 40 series, the 4090 specifications right now. We got that GDDR6. 24 gigabytes of it on a 384-bit bus with 21 gigabits per second. It should be a nice fast mining card that does take a lot of power at that 450 watt TDP. Launch date in August of 2022. It's a little bit more cut down once we get to the 4080, which will have 16 gigabytes of the GDDR6X, but it'll be on a 256-bit bus, unfortunately. And we don't know the memory speed. My assumption would hopefully be 21 gigabits per second, but due to, of course, the cooling needed for that, the potential for it to be around 18 or 19 gigabits per second is more of what I would expect. Now, as far as the 4070, the rumored specifications right now is a 192-bit bus with 18 gigabits per second memory speed. It does say plus. I'd assume 19, more than I would assume 18 at this point, but that's yet to be seen. Of course, it will depend on if it's GDDR6 or GDDR6X, which is unclear for the 4070 at this given time. Now, we've seen a huge spike in, of course, the cryptocurrency markets today, actually just this week in general. It's pretty common to happen on Memorial Day weekend, and that's due to large whales not really moving around as much as just the general market, and things kind of settle out and not a lot of trading's going on, and more people are just purchasing Bitcoin maybe at their Memorial Day parties, whatever it may be. It seems to be a pretty common event where holiday weekends especially, we see increases of cryptocurrency prices. So I wouldn't say this is indicative of a recovery, but let's see what everybody else is saying about the markets. We'll start things off with Cardano's ADA spikes 25% and leads gains in crypto majors. Bitcoin showed signs of bottoming out earlier this week, with broader market adding some 4.4% in the past 24 hours. Crypto markets added some 4.4% to overall capitalization in the past 24 hours as Bitcoin saw signs of bottoming out and traditional markets showed strength at the start of this week. Bitcoin regained the $31,000 level in US hours on Monday after 9 weeks of losses. The move came amid a relief rally in Asian markets and technical data suggesting the asset may have bottomed out between $29,000 to $30,000 range. Cardano's ADA token led gains among crypto majors with 17% rise to trade over 64 cents on Tuesday. Fundamental catalysts include a rise in the issuance of native assets on the network. Over 5 million assets have now been minted on Cardano, data shows. And the upcoming Vassal hard fork, a network upgrade expected in June that would increase scaling capabilities. I have noticed that obviously with the failure of Solana, especially recently, that a lot of people are starting to mint more on Cardano, and it seems to be functioning well. And that is a very significant thing when we start discussing NFT marketplaces, the high fees of Ethereum, the threat of the merge having some bumpy road ahead for Ethereum. I think people are looking for other chains. Cardano is obviously a really popular one. And while Solana was making waves, they have also made waves in the most failures, right? Over 11 times down. Right now, the clock is behind 30 minutes, and it doesn't seem like it is reliable by any means at this point. So, you know, if I'm looking at these types of non-proof of work projects that can handle NFTs and so on, I guess Cardano would be the best option, right? And that probably rings true even post proof of stake move for Ethereum. The thing about Ethereum, of course, like we've talked about before, is that it has that first mover advantage. It is on pretty much every single NFT marketplace. It has the largest ones like the OpenSeas, the Rarible, all that sort of thing. Of course, most of those platforms have already moved to even utilizing some sort of scaling solution for Ethereum, like Polygon Matic, for example. But even Polygon Matic has shown some issues here in the past. So it's important to just keep all of these things in mind. What are y'all's thoughts on Cardano? And are you, bullish on it, bearish on it? What do you think about the integration, the possibility of the Ergo DEX, for example? Do you think this has good, good vibes for Ergo from the proof of work standpoint? I kind of think it does, obviously, especially with Ergo DEX and integrating between bridges and, of course, the Oracle options. Of course, I know Cardano's chosen Chainlink primarily, but, Charles Hoskinson, who, runs the lead, I guess the leader of Cardano, is very big on Ergo as well. So does that spell out good news for proof of work miners from the Ergo perspective? All right, so price charts suggest ADA saw support at the 45 cents level. Readings on the Relative Strength Index, RSI, a tool used by traders to calculate the magnitude of an asset's price move, fell to nearly 33 this week, which suggested early signs of ADA bottoming out. However, the token could see strong resistance at the 80 cents mark. Ethereum added 5.8% even as gas fees fell to lows. A fall in fees usually implies falling demand for the network, suggesting the move may have been led by traders betting on a market-wide revival instead of being driven by fundamental growth. Of course, as Bitcoin goes up in price, it trends that most everything else follows up with it, right? We talked about this yesterday too. What you'll see is kind of everything that's in the red will be the stable coins, and everything that's in the green will be everything else, pretty much, outside of a few outliers. And the big green pumps are the ones where maybe some things are changing. What this tells me is that, once again, we see record high minting happening on Cardano and record low gas fees on Ethereum, which tells me that Ethereum is not being utilized as heavily right now within the NFT space as Cardano is. Now, that's just as of this week. A new big project that launches on Ethereum, that changes very, very quickly, right? So you see like another Bored Apes launch, another ape coin project pump, and then you'll see fees pump back up on Ethereum. But as it sits right now, what we're seeing is basically more activity in the NFT space on Cardano than we are seeing on Ethereum, at least of just today and yesterday. So just to be clear, XRP rose 5%, Avalanche's AVEX and Solana's Sol added up to 4%. Meme coins, Dogecoin, and Shiba Inu saw limited gains, rising just 3.8% and 2.3% respectively. And right before I did this show or started live, I noticed that Doge dropped back down. So just to keep that in mind, I think Doge is down as of right now. Elsewhere, Metaverse tokens saw a bump in prices. Axie Infinity's AXS rose 46%, while the Sandbox's SAN rose 11%. Growth in AXS came weeks after the game's Origin version was launched in April, which created a demand for the tokens. The relief in crypto markets comes amid optimism in Asian markets. Coronavirus cases in China dropped to under 100 for the first time since early March. FUD, bro. Spurring an increase in sentiment among traders betting on a wider economic recovery. The rally in Asia continued on Tuesday. Hong Kong's Hang Seng and China's Shanghai Composite added over 0.7% since the session start, while futures on U.S. tech-heavy NASDAQ 100 gained 0.63%. So still also following a little bit of the traditional markets. Nothing really shocking there. Bitcoin also finally sees this rebound, but could it be short-lived? Now, I lean towards probably, right? I think like bear market, we're looking at, March 2024 before a halving. We're looking 6 months after that before the market starts adjusting to that halving, and that would be the traditional super cycle. However, let's see what the news is. Bitcoin has finally seen relief and has soared above last week's lows of 28,500. The world's largest cryptocurrency by market capitalization was up 3.4% over the last 24 hours, trading at around $31,600. Bitcoin has tumbled roughly 16% over the course of May, at one point taking the price down to its lowest since late 2020. Bitcoin reached a high of 32,200 on Monday and performed significantly better than the S&P 500 futures, while Americans took the Memorial holiday. Lauren Kiss, head of Europe at Hashdex, said in an interview with CoinDesk that this is a short-term trend for Bitcoin and the current signals are not substantial and could reverse very quickly. Quote, I still see a trading range in the 30K level, which could break as a downward pressure is still compromised, end quote. Pablo Hodar, something like that, the financial products manager at Storm Partners, a systems provider for cryptocurrency space in Europe, also said that despite the rebound for Bitcoin, the fundamentals have not yet changed. We might see Bitcoin going further upwards to $35,000 this week, as some short sellers will get liquidated and will need to buy back, but we still remain bearish for the short term, he said. The real question is, can Ether break above $2,000 again and continue its ascent as altcoins try to readjust after Luna demise? But we are not confident short term, said Kiss. So obviously one of the big things is going to be Ethereum trying to break that $2,000 mark. I think it will, especially because the way they are communicating about the merge is very murky. And from the outsider's perspective, it's like, oh, it's happening on June 8th. But as far as I understand so far, and I'll go double check this here on Twitter, but the reports are just the testnet. All right. So don't get confused. We have a merge of the testnet on June 8th. We do not have a merge of the final network. That could create some false hopium for Ethereum just by the way they're communicating that to the general public, and the general public not being fully educated on the entire situation. So, it could go either way. People buy in. Should you be buying in before the merge? Maybe, you buy the rumor, you sell the news, but are you going to be able to sell the news if the whole network breaks, right? Last week, CoinShares data showed that Ethereum witnessed outflows of $11.6 million US. Ethereum performed considerably worse than Bitcoin did last week. The total year-to-date inflows to all cryptos-backed funds currently amounts to $520 million, compared with inflows of $5.9 billion the same time last year, according to data from CoinShares. Altcoins also saw positive increases over the last 24 hours, with Cardano's ADA taking the lead, soaring by 27%, Aave by 16%, and Near Protocol by 12%. Play to earn game Axie Infinity, the native token of the game, soared by 29% over the last 24 hours. So there you go. That's pretty much what's going on there. We do have some more bullish news surrounding cryptocurrency in general, and that is PayPal Ventures invested in team reviving Diem blockchain. Aptos Labs announced a $200 million funding round in March. It's now revealing that PayPal was among the backers, marking the payments giant's first investment in a layer 1 project. Aptos Labs, the team that's bringing Facebook's star-crossed Diem blockchain to life, told CoinDesk that PayPal Ventures was one of the investors in a $200 million funding round confirmed in March. The investment was PayPal Ventures' first in a base layer project. Quote, "We believe in the work that the Aptos Labs team is doing to build a safe and scalable layer 1 blockchain." PayPal Ventures investment partner Amon Basin said in a statement, quote, "With the promise of improved reliability and security, faster transactions, and lower fees, the Aptos blockchain is designed in a way that makes it both conducive to building new rails and compelling to corporate clients and crypto native developers." Yeah, I'm not a fan of it. Just saying it. I'm just gonna put that out there. Notably, PayPal was involved in the initial launch of Libra, committing at least $10 million to become a member of the Libra consortium. The company quickly pulled out following backlash on Capitol Hill. The Aptos funding round was led by Andreessen Horowitz with participation from Multicoin Capital, A16Z alum Katie Hahn, and 3 Arrows Capital, Parify Capital, and Coinbase Ventures, among others. PayPal Ventures participation wasn't revealed in the initial announcement. The Aptos team is made up of the original creators, researchers, designers, and builders of the Diem, formerly Libra, blockchain. Meta Platforms, formerly Facebook, announced the blockchain as the backbone of a stablecoin project in 2019, but the project never made it out of the gate because of regulatory hurdles. Earlier this year, Meta confirmed the shutdown of Diem and sold the technology and other assets to Silvergate Bank. However, much of the work done by Diem affiliated teams was placed under open source licenses, meaning the intellectual property is fair game. Aptos is led by Avery Xing and Mo Shaikh. Xing co-created the Diem blockchain's DMBFT consensus protocol, which Aptos is using. Aptos developer testnet launched 2 months ago. The firm expects to release the mainnet during the third quarter. Now, I don't know if Aptos is available. It's definitely one that I would be interested in short term, right? So let's take a look. I don't know if it'd be called Aptos or it would be called Diem. Well, Diem Libre is dead now, right? Anyways, need to look into it more and understand which one is which. I guess it's called, well, that's the protocol, the DMBFT. So there you go. We also have an NFT launch from Crypto.com, who is the sponsor of the show. They're doing a launch right now of their UFC NFTs. I'm a fan of the UFC. I may pick one up just to pick one up for fun and participate within the network. This isn't financial advice, and I never really condone purchasing NFTs in general. I just understand that also if it's something you want to do, then go ahead and do it. You can also buy my NFT if you would like. It's listed on the Polygon network, and it is the Keep Calm Mine On artwork that I drew myself. So you can also purchase the t-shirts with that, which is a physical item and probably more advantageous. So there you go. Mining profitability. So what did we do? We switched over yesterday to Ethereum and ZIL. I was going to switch to Ethereum Classic and ZIL. Put a pause on it so that I can recover some much needed revenue to cover rent, power, etc. And I can't quite make it all the way up with Ethereum Classic right now because we took 3 days and we were solo mining Ergo and we never hit a block. So I got completely wiped out from the Ergo test. I was originally pool mining on GetBlock, but when they decided to launch the same day we decided to move to Ergo, they decided to launch their sub-pooling, which broke the pool. And so I just switched really quickly to solo mining on Woolly Pool. That was a terrible decision, and my luck was absolutely awful at 300% with no blocks found for 3 days. So we went back to, of course, pool mining, and we switched to Ethereum and ZIL. We are on easel.me. It's not the most profitable way to do it. It is the easiest way to do it and the quickest way to do it. And the reasoning for that is, is essentially going to be that I want to stack some Zilliqa. I still want to be profitable on Ethereum, and I can't dual mine other things at this time like TON or Aliphium due to heat. So there's a low heat way to do it. It functions well with R mode. R mode is important for my farm because I have a hefty amount of 5000 series GPUs, which means I'm able to reduce my power consumption significantly. And we're still working on that as well, because the R mode I can get to apply, but it doesn't always apply to all the cards, reboots, that sort of thing. I'll be out there at the farm today trying to get it all worked out. I'm trying to figure out exactly on R mode what constitutes the reasoning for the overclocks applying on some cards properly and bringing the power consumption down, and not applying it all on other cards and remaining high on the power consumption. Now high is relatively still low. We're still talking about 55 to 56 mega hash a second at 100 watts or 90 to 100 watts. But when we get R mode locked in, and those overclocks in, we usually sit somewhere between 75 and 80 watts. So it is significant to get them down into that kind of, I guess, space or whatnot. Our current hash rate is at 5.71 gigahash a second. Our current balance is 0.05 ETH, which means since yesterday, since we put them on, we've done $89 there. We have 45 ZIL in the bank, and about, I believe we already had a payout, one payout of like 32 ZIL or whatever yesterday. So right now it does say for the forecast on the day we're at 0.068 ETH, which looks to be lining up with pretty much everything else on the markets. And then ZIL, we're at 108 ZIL a day. That'll total us into 137.22 per day, and hopefully should be getting better. That is on a 3-hour average of 5.25 gigahash. We have not been mining for 24 hours yet, but the 24-hour average is 3.83. The reason it's low, once again, is due to that. The reported is 5.63 gigahash, and the current is 5.71 gigahash, which is pretty good because it's starting to warm up outside. And I have to say that a lot of that is due to getting R mode implemented more than anything else. Of course, I'm still in the process of converting all of the 5700s to server cases with no fans, because I'm tired of replacing fans on my GPUs, and it just seems to be better. And with R mode, you can get pretty much all those memory temperatures under 100 degrees Celsius, no problem. And that's in a 120 degree ambient temperature, right? So that's our current forecast. That's going to put us at $4,116.77 for 30 days. Rent's at $1,600 and power's at like rent's at $1,600, power's at like $1,400 right now. I do need to upgrade, meaning I do need more GPUs online as it sits, and I'll probably be shutting off some of my ASIC miners. We'll talk about that in a later video, because that's just going to be necessary. And I have shut off CPU mining primarily to make sure that I get all of the R mode implemented first and remain stable there before starting to re-implement some CPU mining. As far as profitability for CPU mining, it's been one of those things where, you know, you can get profitable on a couple of spec coins, and then it kind of takes a dump from there. It looks like my mouse has died, so give me a second to find the charger. There we go. So let's look at what to mine. We can just throw that all the way down there. I have one rig down, the RX 6000 series rig. We'll talk about that later when I figure out what's wrong with it, probably. All right, so what to mine on the RTX 3090? Let's correct the Zel hash to 110, the Kapow to 60, and the Firo proof of work to 60, and calculate that bad boy out. 10 cents a kilowatt hour. Ethereum is at $2.89 a day in revenue and $2.12 a day after power. Coming in second is Ravencoin at $2.54 a day in revenue and $1.75 a day after power due to its higher power consumption requirements because of the core clocks. Same story with Firo, but it does come in third at $2.34 a day in revenue and $1.60 a day after power. Going from there, we have Conflux at $2.28 a day in revenue and $1.49 a day after power, and Ergo with its low power actually beating out Conflux after power costs at $1.57 with $2.19 a day in revenue. We have Cero at $2.09 a day in revenue and $1.30 a day after power. Gemlink, which I'm not familiar with, it's a Z hash, it says, is $2.10 a day in revenue, $1.41 a day after power. Ethereum Classic, $1.89 a day in revenue and $1.12 a day after power. Ryo at $1.60 or $1.86 a day, in revenue, and $1.23 a day after power. Bitcoin Gold coming back up, and Flux all the way down here, $1.80 a day in revenue and $1.10 a day after power. Now, if you mined Zel hash through NiceHash, you would make a little bit more mining that Flux at $2.04 a day in revenue and $1.34 a day after power. Mining pool profitability for Ethereum. Let's hop into it. The last 90 days, we have F2 pool in first, mining pool up in second, Ethermine in third. Last 60 days, we have Crazy pool in first, mining pool up in second, F2 pool in third. For the last 30 days, we have Ethermine in first, F2 pool in second, Nano pool in third. For the last 21 days, we have Crazy pool in first, Ethermine in second, Nano pool in third. For the last 14 days, we have Crazy pool in first, Nano pool in second, F2 pool in third. For the last 7 days, we have ZET in first, Nano pool in second, F2 pool in third. For the last 3 days, we have ZET in first, Nano pool in second, F2 pool in third. And for the last day, we have Nano pool in first, F2 pool in second, and Hivon pool in third. Mining pool stats, let's take a look and see if we've had any significant network changes. 230 exahash on Bitcoin. That's down 3 exahash a second from yesterday. And we're seeing that nice pump of 8.5% in the Bitcoin market and a nice little dip in difficulty on the network, interestingly enough. On Ethereum, we're at 1.09 petahash a second, not quite the all-time high, still sitting right around where we expect it to be at. No huge changes, and difficulty continues to rise, and it is down 0.59%. I am seeing basically a lot. It's interesting that Bitcoin or Ethereum's not following Bitcoin as heavily right now. Ethereum Classic, let's take a look. 26 terahash a second, not too many changes from yesterday. And let's get into the Fluxerino. Flux is at 1.57 mega solutions a second, so up about 0.07 mega solutions a second. Of course, this can change minute to minute due to the way the NiceHash rentals work and function, so I wouldn't take too much of it to heart. Let's take a look at Ravencoin. And Ravencoin is continuing to remain around that 2.5 terahash a second at 2.47 terahash a second. And the difficulty continues to drop just a little bit more. Our good old buddy Flux, we already checked. And Ergo. Let's pop into Ergo. And Ergo is at 14.5 or 14.18 terahash a second. And its difficulty is starting to come up after a little bump there. And this one was no good for me on solo mining with over 13 gigahash a second. So I don't know. I think a lot of it probably has to do specifically with my internet connection. And that is what it ends up being. So there you go. Let's get into ASIC mining profitability. The KD6 is at $29.15 a day. still under that $30 mark. The Antminer L7 is $29.07. The KD5 is at $18.87 a day after power. And then if we scroll down and look for the S19 Pro, still sitting right around that $8 a day if you mine to mining rig rentals, and Digibyte is still around that $7.75 a day. So not too shabby as far as all that goes. Let's get into questions and comments. Remember, super chats are never required, always appreciated first to be answered because they're the easiest to read. And if you want the message highlighted and answered, tag at Son of a Tech, and I will be able to read it much easier. Dave Jack says, Ask Son of a Tech has had too much short bus in his life. Music is moving, says Ask Son of a Tech, looking like my neighbor. I don't know what your neighbor looks like or what that was in reference to. Dave Jack says, Ask Son of a Tech, I know a few people with tens of thousands in Cardano at the moment. Nice. Dave Jack says, Ask Son of a Tech, what about Conflux? I didn't look at the Conflux network profitability, now did I? Or network size. So that's my bad. Pay Me in Crypto says, Ask Son of a Tech, thoughts on Oh God, a girl claiming her Prog Pal algo would have kept Ethereum as proof of work another 5+ years. Seems delusional. You know, it is what it is. Like, Ogata Girl's always been an interesting crypto Twitter account. Obviously, the pill was a big deal. They tried to sell that directly and put it behind walls for a while. There was a lot of weird, sketchy drama surrounding it all. That entire crypto account and user is very drama filled in general. So I actually don't follow it too closely anymore since the development stopped, if that makes sense. Crypto Mikkel says, I know the feeling, man. We'll make it. Yeah, we'll make it. Black Cat Crypto says, Ask Son of a Tech, ETH Zill for the win. Yes, sir. Let's go. Let's get it. All right. Papa Lip says, Ask Son of a Tech, with R mode, I found it is best to stop the miner, tweak the overclock settings, restart the miner. Otherwise, it would either fail or power use would go way up. Hope this is helpful. Yeah, I've noticed like full reboots work well too. Because it essentially does the same thing, right? But R mode is still finicky in general. So I've noticed, like, unfortunately sometimes it is what it is, right? Like you'll kind of have it functioning for a while, it'll restart the miner, and then it won't work anymore. So, you know, look, I'm just going to show all of these fun comments from Master Miner. First of all, I haven't fudded anything, so I think that you're a little off right now, and I'm getting a little tired of the trolling, my dude. So if you want to talk crap, you can come talk crap, I don't know, somewhere else, Twitter, whatever it is. If you continue here, I'm just going to ban you. You got to say what you wanted to say. Everybody can read it now, and we're done. All right. Killyfish says, Ask Son of a Tech, I hit an Ergo block. Did they sort out their emission schedule? It doesn't look like it, right? So we looked at it just a second ago, and to me, it looks like it's still kind of delayed, right? So you're seeing these big bumps, and then we had the drop, right? So we dropped down to 14.22, and what's happening over here? The difficulty's going up, right? So it doesn't look like it's real time, best I can tell. Ugh. So there you go. Detroit Iris says, Ask Son of a Tech, when you dual mine ETH and ZIL, do you take a hit on pool hopping because you stop mining ETH for a brief time? On a traditional pool, yes. So there are ways around that, specifically with there's like a way you can do the protocol that works well with specifically Ethermine, right? But that's why the easel pool makes it a little bit better, because easel pool is mining both right there and handling it on the pool side. So you don't get pegged for that. Now, one of the downsides of easel pool, which I'll talk about here, is specifically that when you go into your settings, there are alternative payout methods. One good thing that they have is you can choose to do PPS plus or PPLNS, right? Which is awesome. They have that option. The downside is their alternative payouts specifically, unfortunately, require you to utilize or connect a wallet, right? And that wallet connection has to be like a MetaMask or a Wallet Connect. They don't support alternate payouts to other wallets. And they do this by verifying through a web wallet plugin, right? Just like you would do with like connecting to an NFT marketplace or to a DeFi decentralized platform, trading platform, right? So that means that you're limited on essentially your alternate payouts. Like they support a lot of them, right? So I think they support OKEX, they support Hecko, Polygon, Arbitrum, BNB. So they support quite a lot. Unfortunately, it's only through like web plugin browser, like browser-based plugin wallets. So for example, like crypto.com will support Binance Smart Chain, they'll support Polygon, all that. And you can, on other platforms, Crazy Pool, Ethermine, whatever, just target that address and it'll still send the payment there. You can't do that on this one. So it's kind of a downside for their alternative payouts. I wish they would, I get why they do it. So they basically will do it to essentially make sure and verify that you aren't going to lose your funds. That's their intention behind it. And that makes sense to a certain degree, because there were lots of complaints when people were just sending it to a wallet that didn't support other chains, right? Texas A says, Ask Tech been working on getting R mode working on 5700 as well. Crashing every 24 hours and having trouble finding how to make it more stable as well. Yeah, so one of the things that I did, and I'm not sure it fixed it. So disclaimer, this rig that I was having issues with, essentially after I did R mode and fully updated everything, I was getting basically driver crashes. And so I did from the console, I did a get app update, just like you would do with any other Linux distro, and then a get app, upgrade. And then it started working. I wouldn't recommend it because the image technically on like Hive OS is supposed to be like kind of within its own bubble, but there was some sort of like built-in, there was some sort of probably like, well, some sort of update to the NVIDIA driver levels that was resolved with that. And I'm not sure exactly what that was. Anonymous Miner says, Ask Son of a Tech, I have one motherboard that is duplicating the Hive USB in the boot menu, and it freezes the rig on boot up after time, and it updated the BIOS with the problem persisting. What would you do? You have a motherboard that is duplicating the Hive USB in the boot menu, and it freezes the rig on boot up. Change your boot order to partition 3. In the BIOS. Wu Chin says, at Son of a Tech, any news about SoCoin? No, I'm too busy and I'm on full baby daddy duty. Double View Cleaning says, hey, at Son of a Tech, any suggestions for RX 580 for Raven? Keeps freezing in stalls. What do you think? probably don't mind Raven with an RX 580. The RX 580s are so finicky as they are, and if you ever flashed it with like an Ethereum focused BIOS, like they don't function real well on Raven. So you would so if that's the case, you need to flash it back, right? Or find somebody that's done a modded BIOS for Raven coin specifically. If that's not the case, Polaris GPUs are extremely finicky. Like, they're amazing at Ethereum, but even on Ethereum, they're extremely finicky, right? Finding the specific correct BIOS and all of that, it can be stressful. I'm not a fan of the RX 580s from a infrastructure standpoint. They stress me out. I know, like, if you really want like good 580 info, I would get with Bitsby Trippin'. Elliot Hanford says, that's Tech. I apt-get update and apt-get upgrade somewhat regularly on my rigs to no negative effect. Correct, yeah. Well, like I said, like most of the time, there are like outliers, like on the older images where I found some issues. So I don't want to recommend it, right? Texas A says, Tech sounds like UEFI and master. Okay. And message retracted. Anonymous Miner says, Tech, sorry I ran out of characters. It only freezes after 12 boots because of too many things in the boot menu. So it freezes. It's not uncommon for that it's not duplicating it. It's just there's two partitions on a Hive OS drive. One partition is so that you can access it in Windows and put the rig.conf file in there. So it's going to read both of those. It's going to read both of those partitions on the USB drive. Your ordering would just be off, right? You could even go into the BIOS and set it up to where it doesn't recognize like the other side. Now, if there's like some sort of weirdness where it's like duplicating like all the way through, maybe something's wrong with the BIOS. We still have a lot of time. Today was a short show. I'm going to pull up the Twitter that you guys were talking about with Tim just to get clarification on that. Make sure something different wasn't really happening here. Okay. Let's get into it. So this is Ropsten for sure. Ethereum's longest lived proof of work testnet is moving to proof of stake. A new beacon chain has been launched today, and the merge is expected around June 8th on the network. So to be clear, this is Ropsten merge announcement. This is not mainnet merge announcement, okay? Second to that is the significance is that the beacon chain launched today on Ropsten. So that is exactly what we're looking at. This is going to be a good article though. This was released on May 30th. Glad that we caught an article. This is on the Ethereum Foundation blog. Ropsten will be the first long-standing testnet to run through the merge. A new Ropsten beacon chain was launched on May 30th, 2022 to provide consensus to the network. The Ropsten beacon chain will upgrade to merge-compatible protocol rules Bellatrix at slot 24,000, expected on June 2nd, 2022. After this, a terminal total difficulty, TTD, will be chosen to activate the merge on a proof-of-work chain. Node operators will need to manually set this value in their clients. Remember, the reason they have to have the node operators manually set this is because they had to increase it to a ridiculously large number, because when they had the TTD set to a specific number, a troll miner came in and started mining on the network, which sped up all the blocks, which meant that the merger is going to have to happen much quicker than anticipated. So they got around this by extending that out. The problem is now the node operators had to not only do the update to set the extremely long terminal total difficulty, but then they had to go back in and now we'll have to set it once again. My question is this miner going to come back in and shoot up the 20x of the amount of hash rate that's currently on the test net and try to extend or try to accelerate it once again. That's going to be interesting. I don't know that it's possible. I don't know that their fix really did anything, though, because it still says that they will be setting a TTD. Another announcement with the exact terminal total difficulty to use for the Ropsten merge will be posted on this blog on June 3rd, 2022. So you just come back here and we'll know what that is. Users should expect this TTD value to be hit a few days after it is chosen and should be ready to configure their clients accordingly on short notice. After years of work to bring proof of stake to Ethereum, we are now entering the final testing stage, testnet deployments. Having tested client implementations on Kintsugi, Kiln, and many other shadow forks, client teams are now ready to run Ropsten, the oldest proof of work testnet, through the merge. In preparation, a Ropsten beacon chain has been launched to provide consensus to the network. After the Ropsten transition, 2 more testnets, Goerli and Sepolia, will be transitioned to proof of stake before focus shifts to mainnet. Other testnets, such as Rinkeby and Kovan, may be maintained and upgraded separately by the community, but will no longer be monitored by the client developers. The merge is different from previous Ethereum upgrades in 2 ways. First, node operators need to update both their consensus and execution layer clients in tandem, rather than just one of the 2. Second, the upgrade activates in 2 phases. The first at a slot height on the beacon chain, and the second upon hitting a total difficulty value on the execution layer. Given these circumstances, Ropsten Network, which is intended to be deprecated after the merge, will run through the upgrade earlier in the development process than previous network upgrades. This will give the community more time to become familiar with the upgrade process. Note, client releases listed below will not be suitable for Ethereum's mainnet transition to proof of stake. Timing. The merge is a 2-step process. It starts with a network upgrade on the consensus layer triggered by a slot height. This is followed by the execution layer's transition from proof of work to proof of stake, triggered by a specific total difficulty threshold called the terminal total difficulty, or TTD for short. On June 2nd, 2022, at a slot of 24,000, the Bellatrix upgrade will prepare the Ropsten beacon chain for the merge. At that point, CL clients, which CL stands for consensus layer clients, will begin listening for a TTD, terminal total difficulty value, to be hit on the proof of work chain. Because the hash rate of proof of work testnets is very volatile, the TTD value will be first set to an extremely high value, and they list that value. At Ropsten's current hash rate, it would take 250 years to hit it. Once the Bellatrix update has happened on the beacon chain, a new terminal total difficulty value, which is expected to be reached in a few days later, will be chosen and announced. Users will then need to configure their node with the new value. Instructions for doing so with each client are available here. When this new terminal total difficulty is hit or exceeded on Ropsten, the execution layer part of the transition, codenamed Paris, will start. Again, note that hash rate on Ropsten is notoriously variable, so the actual time at which the terminal total difficulty takes place may fluctuate. Once the execution layer has exceeded the TTD, the next block will be solely produced by a beacon chain validator. We consider the merge to have been completed once the beacon chain has finalized this block. Assuming normal network conditions, this should happen 2 epochs or approximately 13 minutes after the first post total terminal difficulty block is hit. A new JSON RPC block tag, finalized, returns the latest finalized block or an error if no such post-merge block exists. This tag can be used for applications to check if the merge has been completed. Similarly, smart contracts can query the difficulty opcode, renamed to Prev-Randao, something like that. Prev-Randao. That's what we'll go with post-merge. To determine if the merge has happened, we recommend infrastructure providers monitor overall network stability in addition to finalization status. The following client releases support the merge on Ropsten testnet. Node operators must run both an execution and consensus layer client to remain on the network during and after the merge. As mentioned above, the following releases have hard-coded total or terminal total difficulty value of X number, which will need to be manually updated after the Bellatrix upgrade and be activated on the beacon chain. When choosing which client to run, validators should be especially mindful of the risks of running a majority client on both the execution layer and the consensus layer. An explainer of these risks and their consequences can be found here, and they provide a hyperlink. An estimate of current execution layer and consensus layer client distribution and guides for switching from one client to another can be found here, which they hyperlink. If you had previously downloaded a client release with Ropsten total or terminal total difficulty of the previous set total or terminal total difficulty, you must either update your release or manually override the terminal total difficulty to that X large number that they provided as specified, and they hyperlink. The consensus layer, they have the names Lighthouse, Lodestar, Prism, Nimbus, and Tiku. And then they say that for Lodestar, the Lodestar release has an outdated TTD value. And so to be compatible with the merge, which has now a higher TTD value, Lodestar users will need to manually override the value. For the execution layer, you have Besu, Aragon, Go or Geth, Go Ethereum, which short is Geth, pretty common, and Nethermind. For Geth, it says the latest release, Sharblu, has an outdated Ropsten TTD. So to be compatible, make sure you do the manual unlock. You can build from source or use the latest Docker image, and then, of course, manually override it. Upgrade specifications. Consensus critical changes for the merge are specified in two places. The consensus layer changes under the Bellatrix directory of the consensus specs repository, and the execution layer changes under Paris spec in the execution specs repository. In addition to these, two other specifications cover how the consensus and execution layer clients interact. The engine API specified in the execution API's repository is used for communication between the consensus and execution layers. Optimistic sync specified in the sync folder of the consensus specs repository is used by the consensus layer to import blocks as the execution layer client is syncing to provide a partial view of the head of the chain from the former to the latter. Here is the FAQ. As a node operator, what should I do? Post-merge in Ethereum, full node will combine a consensus layer client, which runs the proof of stake beacon chain, and an execution layer client, which manages the user state and runs the computations associated with transactions. These communicate over an authenticated port using a new set of JSON RPC methods called Engine API. The execution layer and the consensus layer authenticate each other using a JWT secret. Node operators should refer to their client's documentation for instructions on how to generate and configure these. In other words, if you were already running a node on Beacon Chain, you now also need to run an execution layer client. Similarly, if you're running a node on the current proof of work network, you will need to run a consensus layer client. For them to communicate securely, a JWT token must be passed to each client. Just reading this and understanding a little bit more of how these two things interact with each other. We've already talked about the separation of the execution layer and the consensus layer being an issue, at least not the original plans for ETH 2.0, and from my perspective being an issue. And now seeing that they require these JWT tokens to communicate between each other, and the need to run essentially two separate nodes, one for the execution layer and one for the consensus layer, there just seems to be more points of failure for proof of stake than there are for proof of work. And that is my humble opinion, but that is clearly they're adding more points of failure. I don't know. What do you think? Let me know in the comment section. It is worth emphasizing that while they are both part of consensus layer client releases, running a beacon node is distinct from running a validator client. Stakers must run both, but node operators only need to run the former. This post explains the difference between both components in more detail. Also note that each layer will remain or maintain an independent set of peers and expose its own APIs. The Beacon and JSON RPC APIs will both continue working as expected. Finally, remember to check back on June 3rd for an announcement of the new TTD. As a staker, what do I need to do? As explained above, validators on the Beacon chain will need to run an execution layer client after the merge, in addition to their consensus layer clients. Pre-merge, this was strongly recommended, but validators could have outsourced these functions to a third-party provider. This was possible because the only data required on the execution layer were updates to the deposit contract. Post-merge, validators need to ensure that transactions in blocks that they create in a test are valid. To do this, each Beacon node must be paired with an execution layer client. Note that multiple validators can still be paired to a single Beacon node and execution layer client combo. While this expands validators' responsibilities, it also gives a validator who proposes the block to the right to its associated transaction priority fees, which currently go to miners. So basically, they need to run an additional execution layer because, used to that was done by the miner. Now it'll be done on the proof of stake side. While validators' rewards accrue on the Beacon chain and will require a subsequent network upgrade to be withdrawn, transaction fees will continue to be paid, burned, and distributed on the execution layer. Validators can specify any Ethereum address as a recipient for transaction fees. There is a man-in-the-middle attack here for this specifically if you're a validator, by the way. And that's going to be losing your JWT token or somehow that getting released and then somebody actually coming in and taking that over. Give me 1 second, boys and girls. What's going on, bud? As announced earlier, we were going to run into, of course, some single dad life, but it's all good. Let's go ahead and finish this up. But like I said, I think the biggest concern I have here now, obviously the security is there for the JWT token. I just am worried that man-in-the-middle attacks on stakers will be viable because there is communication between the execution layer and the consensus layer, and whenever they get paid out for that in particular, you could start seeing basically those payouts get hijacked for staking. That's obviously going to be a staker's or validator's problem, right? After updating your consensus client, be sure to set the fee recipient as part of your validator client configurations to ensure transaction fees are sent to an address you control. If you have staked using a third-party provider, it is up to your selected provider to specify how these fees are allocated. Testnet upgrades are the last chance for validators to ensure their setups work as expected and resolve issues. Information about running a validator on Ropsten Beacon Chain in preparation for the merge can be found here on the Ropsten Staking Launchpad. We strongly recommend that mainnet validators run through the merge on Ropsten and other testnets before the Ethereum mainnet transitions to proof of stake. As an application or tooling developer, what should I do? With the merge going live on Ropsten, now is the time to ensure that your product works as expected through proof of stake transition. And in a post-merge context, as explained in a previous post, the merge will have only minimal impact on a subset of contracts deployed on Ethereum, none of which would be breaking. Additionally, the lion's share of user API endpoints remains stable unless you use proof of work specific methods such as ETH_GetWork. That said, most applications on Ethereum involve much more than on-chain contracts. Now is the time to ensure that your front-end code, tooling, development pipeline, and other off-chain components work as intended. We strongly recommend that developers run through a complete testing and deployment cycle on Ropsten or Kiln, and report any issues with tools or dependencies to those projects' maintainers. If you are unsure where to open an issue, please see this repository. As an Ethereum user or Ethereum holder, is there anything I need to do? And they say no. As a miner, is there anything I need to do? They say no. If you're mining on the Ethereum mainnet or Ropsten, you should be aware that each network will operate entirely under proof of stake after the merge. At that point, mining will no longer be possible on the network. This is expected around June 8th, 2022 on Ropsten, and later this year on Ethereum mainnet. So there you go. Like I said, you don't have to worry about it right now because Ropsten is just a test net, but later this year on Ethereum mainnet. So they're aiming for end of the year. As a validator, can I withdraw my stake? No. F you. The merge is the most complicated upgrade to Ethereum to date to minimize risks of network disruptions or to minimize risk of the complete crashing of the Ethereum price. A minimal approach was taken, which excluded any non-transition changes from this upgrade. Withdrawals from the beacon chain will likely be introduced in the first upgrade after the merge. Specifications for both the consensus and execution layers are in progress. When merge, as of this publication, the date for the Ethereum mainnet proof of stake transition has not been set. Any source claiming otherwise is likely to be a scam. Updates will be posted on this blog. Please stay safe. Assuming no issues are found with Ropsten once client testing is complete, Ethereum's other testnets will run through the merge. Once Goreli and Sepolia have successfully transitioned and stabilized, a slot height will be chosen for the Bellatrix upgrade on the beacon chain, and a difficulty value will be set for the mainnet transition. Clients will then make releases that enable the merge on mainnet. These will be announced on this blog and in other community publications. This assumes no issues are found. However, if issues are found at any point in the process or test coverage is judged to be insufficient, these things will be addressed before continuing with the deployment process. Only then will it be possible to estimate the exact date for the merge. In other words, it says soon. So there you go, guys. We have a soon launch of the Ethereum testnet merge. If you're staking, you won't be able to withdraw. So cool. Glad you guys are so happy for proof of stake. And your awesome 7.5% yearly returns that are based on a single coin. That's awesome too. Terrible investment. I am done for today. Make sure you guys hit the like, comment, subscribe, notification bell, and share the stream out with your friends. We had an okay turnout. I'd like some more likes on the video. And then I'll probably be covering, I guess, this in more depth later on. The one specifically that I wanted to take a look at was how these communicate specifically, because that's a big worry to me. I mean, splitting up the execution layer and the consensus layer has kind of always been a worry for me, but the way... So they just basically communicate over a RPC. And then they use a JWT secret to essentially encrypt and code that. But if those aren't... Man. just speaking from experience of running a pool and understanding that how that functions, and understanding that there can be a man in the middle attack there. You know, if you're staking or validating, and then like if you're going through a third party, the risks of the third party there, losing a lot. Tell you what, I wouldn't want to be running a staking pool. No way, Jose. All right, I'll see you guys next Tuesday. Stay safe. Stay free.